Welcome to Daily Tax Minute. This is Tony Novak here to share a few points on staying out of tax trouble and saving on taxes. Today's topic is Best Tax Shelters Part 2. And I'll recap and say that Part 1 or two episodes ago, we covered the features of an ideal tax shelter, and it was sort of a tease because I didn't name any specific ones, but I went through a list of what we look for in the very best type of tax shelter under the ideal conditions. So today, let's take it a step further and actually talk about a real life example. So first of all, for this type of tax shelter, we're talking about someone, usually a upper middle income person, who says, I've used up all of the usual tax deductions. I have an unusually high tax burden this year. What else can I do? That's a common situation that a tax planner like me or other CPAs and EAs frequently face. And those of us that do tax planning know that once we go through the usual things, maxing out your 401k, using investment real estate, maximizing your depreciation expense, and offsetting passive and active income to the extent possible. Once we've done all those usual things, we sort of hit a wall, and we need to take our game up a notch in order to get bigger tax savings results. And it's a good time to insert that we never take on a financial strategy just for the tax benefits alone. That would be stupid on at least two different counts. We don't do that. We look for a business and profit making opportunity that also has tax advantages. So, what do we look at next? I find that in most cases, and in an increasingly common scenario in this economy, is to invest in a small business, an active small business. There are many good small businesses that need an outside investor, can return an attractive long-term rate of return, maintain that fairly securely, low level of risk compared to other types of investments, and what we're talking about here today, provide a big immediate tax benefit. How does that happen? Well, the setup that I like to see under ideal circumstances, like to see an active business that takes in a investment partner's capital, perhaps on a leverage basis. In other words, you put in 10,000 and a bank loans 30,000, so your capital account is 40,000 together. Writes off most of that or all of that immediately in the first year. So that's where the tax benefit comes from. If you put in 10,000 cash and you're taking a $40,000 deduction on the first year, you've almost saved enough in taxes to cover your cash out of pocket. In other words, on a cash basis, you're free and clear. So at that point, and by the way, the setup usually used is a partnership with a special allocation of tax attributes. That's normally the way you accomplish that type of thing. That's how investors and small business owners can work together best. Second, I like to see a real estate component because it adds long-term stability and adds a solid, unmovable source of value. Under the worst circumstances, it's not going to disappear overnight or go belly up if it's like an intangible asset might, like a crypto firm might, or some other tech type of firm. You have a real physical hard asset underlying that. And there are a lot of small businesses that do have significant equity in real estate. They just can't tap into it. An investor can use that for security, and we're not going to get into the ways to do that, but that can be done. And so that's the ideal situation. The third thing is, if the investor is looking for a long-term investment. By say long-term, I mean more than 5 years or longer. We can arrange to set that up as a qualified small business stock so that when it is sold, the business is sold or the assets are sold, we arrange it as a stock sale, and the profits on that stock sale are completely tax-free. So let's recap that. You put money in, you deduct a whole bunch, all of it, maybe more than you put in right away, first year, get an immediate tax savings. You look for security in your investment while the small business operates and hopefully builds up and makes a profit. And in worst case, the third point, you have some real estate value underlying your investment and you have some security interest in that. And then at the end of your holding period, you cash in on a tax-free basis. That is the best type of tax shelter in my practice, which is now, I guess, on its fifth decade. And I love to talk about those type situations. We develop each one individually for every small business owner and every investor. If you'd like to hear more, I'd like to talk to you. I'm easy to reach through social media, or you can reach me one-on-one at taxproblems.cpa. I'll be back tomorrow with another Tax Minute.